We are actually the second largest pool of university assets. Harvard is the largest at about $35 billion. Yale has around 20. Stanford and Princeton have about 14 or 15. Now, what you'll often hear is that the UT endowment is the fourth or fifth largest in the country, and that's true because of the $25 billion that we manage. First of all, not all of it's endowment money. Some of it is operating funds, both short and intermediate term. And as I mentioned, for the Permanent University Fund, which is about 12 of the 25 billion, a third of that, roughly 4 billion, is for the benefit of A&M. So that's not counted when people count the size of the UT endowment. We're not responsible for raising the funds, nor are we responsible for spending the money. We invest the money, and every year, approximately 4.75% of the assets gets distributed to be spent. And so our job as investors is to earn back what gets distributed, the 4.75%, plus inflation, because the overall objectives of the endowment are not only to provide for current needs, current spending, but to make sure those assets are available for future generations. We're a separate independent company, and we're set up that way so that we can attract and retain investment professionals, pay them at market rates, provide them an environment where we can invest based upon the economic merits of a particular investment. And so we don't get involved in social causes. We're not a political policy making organization. We're an investment management company. The fact of the matter is we have a lot of different constituents that are interested in what we do. The Texas Tribune, the media, the legislators, elected officials, the alumni and the faculty and staff of all of the institutions. The peak of the funds was actually in October of '07, kind of a year before the financial crisis in the fall of '08. And not coincidentally, the peak of the stock market was in October of '07. Well, through December 2010, we're now at 98 cents on the dollar. If you adjust for any new money that was raised and the distributions that were made and just look at investment returns, we're at 98 cents on the dollar. As a point of reference, the stock market's at about 85 cents on the dollar. For fiscal year 2009, we were down 13%, but for fiscal year 2010, we were up 13%. Over the last 3 years, we have been I think the fifth or sixth best performing endowment of the 20 largest endowment. Last year, we were the third best performing endowment. It really is the case that the Board of Regents could have money invested without a UTIMCO, without staff. They could identify an asset allocation, say 60% in stocks and 40% in bonds, and then invest that passively, have all the money in, say, a S&P 500 index or a Barclays bond aggregate index. And so you don't need a fancy staff or investment management company to do that. So what we do is we track our ability to outperform that, what we call our policy benchmark, what could be done without us. And in order to incentivize us and compensate us, really not up to private standards, but at least closer to the private sector than a pure kind of a government type approach. We do receive certain incentive compensation. We think the record stands up pretty well. Of course, in our business, we're always looking at and worried about the future, and I think we'll continue to be in a difficult economic and investment environment.